Welcome to Talk Tickers. Today, we are diving deep into TransMedics' second quarter 2025 earnings call. This was a really pivotal report, and it definitely got the market talking. So let's jump right in. The company dropped its results after the market closed, and in the very next session, boom, the market spoke, and it spoke loudly, pushing the stock up over 10%. So what exactly was in that report that got investors so excited? We're going to start with the headline numbers. And folks, this was a classic textbook beat and raise quarter. It was just a fantastic display of strong execution from top to bottom. I mean, just look at these numbers. TransMedics didn't just beat earnings estimates, they absolutely blew them out of the water with a surprise of over 100%. And on the top line, revenue came in strong at $157.4 million, which is not only a nice beat, but also represents a really impressive 38% growth year over year. This wasn't just a slight beat. The scale of this outperformance really signals some powerful momentum. So where did it all come from? Well, management said it was driven by a record number of clinical cases and really accelerating adoption of their core National Organ Program, or NOP, across all three of their major organ platforms, liver, heart, and lung. So how did Wall Street take the news? Well, they loved it. The stock took off immediately, popping over 8% in after-hours trading. The next day, it closed up 10.5%, and look at that volume, it was heavy. This just confirms that the big money saw this report and felt very bullish. Okay, so you see numbers like that, and the big question is, how? How did they pull this off? Well, if you listen to the call, management kept coming back to their core strategy, which they call the TransMedics Trident. This Trident thing, it's not just some fancy marketing term, it's their entire integrated business model, and they see it as their key competitive advantage. It's not just about selling a product, it's about providing a whole full-stack solution. We're talking hardware, clinical services, and their own logistics network. It's designed to create a really significant moat around their business. So let's break down what this Trident actually is. Think of it as a three-pronged attack. It all starts with their core technology, the organ care system. Then, they wrap that technology in their NOEP service model, which provides all the clinical support. And finally, the third piece is their own logistics network, including 21 company-owned airplanes, that ties it all together and makes sure those organs get where they need to go fast. All right, so now we understand the strategy that's getting them these results. But what's next? Let's talk about what's coming down the pike, both the good stuff and the potential bumps in the road. And talk about momentum. This is huge. Right around the time of the earnings call, they got not one, but two massive green lights from the FDA. These are conditional approvals for what are called Investigational Device Exemptions, or IDEs, for both their next-generation lung and heart platforms. That's a big deal. Both of these crucial trials are now expected to get started before the end of the year, which sets them up for some major catalysts in 2026 and beyond. Now, it's not all smooth sailing, right? You've got to look at both sides of the coin. On the one hand, you have these powerful catalysts, like the new clinical trials and a new digital platform they're rolling out. But on the other hand, they're dealing with some market noise, things like what competitors are saying, a recent article in the New York Times, plus some internal operational stuff, like scheduled maintenance for their airplane fleet in the second half of the year. And speaking of that competitive noise, management didn't shy away from it one bit. In fact, the CEO, Wally Pien, addressed it head-on. He basically said, hey, as we keep executing and taking market share, our smaller competitors might get hurt. This shouldn't surprise anyone. It was a really direct way of telling the market not to confuse a competitor's problems with a problem in the broader industry. Okay, so we've got the strategy, we've got the catalysts, now let's bring it all back to the money. Let's dig into management's updated financial guidance and what they're seeing for the future. After a quarter like that, you would hope they'd raise their guidance, and that is exactly what they did. They bumped up their full-year revenue outlook to a range of $585 to $605 million, which works out to about 35% growth. They also held firm on their long-term gross margin target of around 60% and guided for some really significant operating margin expansion this year. That's a huge vote of confidence. And they didn't just talk about this year. They gave us a peek into their long-term vision for 2028. And let me tell you, it is ambitious. They're targeting 10,000 transplants a year in the U.S., and they see a path to over 20,000 once their new kidney platform is up and running. They also think they can get operating margins to nearly 30%, and they're even looking at taking this whole model over to Europe. So, we've gone through the quarter, the strategy, the future outlook, which brings us to the big so what? What's the final verdict? What's our call here at Talk Tickers?
After breaking down a quarter that was just a crystal-clear display of execution with a strong pipeline and raised guidance, the real question for any investor is pretty simple. What's the move now?
For us, the call is clear. Outperform. We have real conviction in this company's ability to keep executing on its growth plan, to expand its market with that clinical pipeline, and to really solidify its position as the leader in the organ transplant space. So if you're on board with that thesis, how could you play it? Well, here's one idea we're looking at: a multi-year bull call spread. The whole idea is to bet on management hitting those 2028 targets. So you'd buy a deep in-the-money call option that expires way out in the future, maybe 2028 or 2029. That gives you leveraged exposure. Then, to help pay for it, you sell an out-of-the-money call with the same expiration. The point is to get leveraged upside on what could be a game-changing story, but with a clearly defined risk profile.
Okay, so that's our take. But remember, this analysis just reflects our perspective on the earnings call. It is absolutely not financial advice. You always have to do your own research and due diligence.